Hello and welcome everyone. My name is Yasser, and as you know that this is a part two of session two of business taxation, which is calculation of taxable income, corporation tax, and prepare corporation tax returns. So everybody can see my screen and can hear my voice. Any issues?
Yes, we can see. Are we gonna get a recording, or we are supposed to take notes? How to
No,
do
no,
it?
you will get a recording. Don't worry, you will get a recording. Okay,
All
you will
right.
get a
No,
recording.
that's fine. Thanks.
Okay, so abbreviations TWDV, AIA, and FYWDA will start from here. Okay, page 39. We finished here last week. So tax written down value, annual investment allowance, first year allowance, and written writing down value. So annual investment allowance. Most items of plant and machinery are pooled together in the main pool. So the journal pool, which is where the majority of the plant and mechanical assets are collected together, is the topic of discussion at this point. So this pool, uh, another student is supposed to come today. Uh, she just asked for link, but she's not here yet. Okay, so is this topic of discussion at this point? This pool does not contain automobiles, which is automobiles, which is a crucial point to keep in mind. So during the period beginning in January 2019 and ending is deemed ending is December 22, the annual investment amount will have a maximum amount of £1 million per year. On the other hand, beginning on January 2021, the IAI will be decreased to a total of £200,000. It will necessary for you to time allocate the annual investment allowance or AIE in accordance with the transition when your accounting period spans over these transitions. Lloyd, you will get previous sessions recording as well. Check your email. Otherwise, I will ask, office to send you an email, okay?
All right.
So you can go through the previous lecture and then you can continue to, second part of my session.
Can I get the email as well, please?
Sorry?
Can I get the email as well,
Yeah,
please?
everyone will get email by Monday, okay? So
Okay,
you
that's great.
email by
Thank
Monday.
you.
Don't worry, I will speak to them. Okay.
Thank you.
So they should send during last week, but I don't know for some reason or might be they were busy. So but anyway, if I will contact them Monday morning, but you can check your email once as well, okay?
Yes.
Okay, or check your learning Moodle as well, Moodle learning management system as well.
Okay.
So writing down allowance, this means the certain assets are not included in the common pool and are handled in distinct manner. Long life assets, integral aspects of uh, sorry here, yeah. Yeah, writing down writing down allowance instead than being dependent on individual assets. The written down allowance is determined by the total balance of the pool. A WDA rate of 18% is applicable for a period of 12 months in the event that your accounting term is either shorter or longer than 12 months. So you will be required to adjust the allowance in accordance with the desired outcome. So, however, it is vital to keep in mind that this scaling up or down only applies to enterprises that are not incorporated, which is something that we will go into, further uh, detail later, into further detail about later. Uh, this main pool, some assets are included in the general pool and are dealt with differently. This means that certain assets are not included in the common pool that are handled in distinct manner. So long life assets, integral part of building or structure, short life assets with depooling elections and assets with part private usage by also trader or partner are examples of these types of assets. Cars with CO emissions that be greater than 50 grams per kilometer are also included in this category. Additional to the general pools will be eligible for AIA disposal from general pool. On disposal, deduct from the general pool the lower of the original cost and sales period. As you can see, that positive balance remains calculated written down allowance if a negative balance remains, a balancing charge arises, for example, negative allowances. So with the exceptions of automobiles assets, they are added to the general pool are typically eligible for the assessment of the AIA. Uh, Upon disposal, you deduct from the pool that amount that is less than the sum of the initial cost and the earning from sales. It is necessary to compute the WDA if there is a positive balance that is still there. So if in other hand there is a negative balance is basically a balancing fee will be incurred, which is effectively the same thing a negative allowances. Can you guys see my screen? No issues, any?
Yes.
So both the main pool and the special rate pool are eligible for the small pools writing down value allowance because it does not discriminate. It is not required, but it's accessible when the pool balance is less than on £1,000 after taking into account any additions for disposal that have occurred during the current month. So it is possible for the written down allowances to be any amount up to the £1,000 for a period of 12 months. So uh, uh, and if the prorated if the accounting period is not 12 months long. Motor vehicles, when it comes to motor vehicles, the laws that need to be followed vary based on the type of vehicle. This means that vehicles such as a van, trucks, lorries, and motorcycles are considered to be plant and machinery, which means that they are included in the general pool. Cars, when we talk about cars, on the other hand, do not follow the same protocol. They are given allowances that are depending on the amount of carbon dioxide that they emit. So we discussed this previously, if you remember then. CO emissions of up to 0 gram is equal to low emission cars. So cars that have a zero emission of up to 0 grams per kilometers are referred to as low emissions cars. There is a first year allowance or FYA of 100% for new automobiles that fall under this category. Second-hand zero emissions automobiles are regarded in the same manner and are classified as belonging to the same category. Despite the fact that these automobiles are included in the common pool, they do not qualify for the annual investment allowances. It has been decided that the writing down allowance for uh, this category will be, 18%. The particular regulations that apply to automobiles with CO emission, two emissions ranging from 0 to 50 gram will be discussed in general details later. So the CO emissions that are greater than 50 gram uh, cars that have CO emission that are higher than 50 grams per kilometer are placed in a separate rate pool to reiterate. These automobiles do not qualify for an annual investment allowance, and the disposal of them is handled in a manner that is comparable to that of the general pool. Special rate pool uh, over the course of time, the writing down allowance for assets that are included in the special rate pool that has modified. It originally set at 8% every year, but as of April 1st, 2019, it has been set at 6% per year. So for the purpose of determining the writing down allowance percentage, the number of months immediately before and following April 1st in the chargeable period is taken into consideration. Long life assets and vital features as well as automobiles with CO emissions that are greater than 50 grams per kilometer are examples of assets that are required to be included in the special rate pool. Balancing charges and allowances when a company sells assets. Uh, uh, when a company sells assets that are part of the journal or special rate pools, the amount that is lower between the cost and revenues is subtracted from the pool before any writing down allowance is computed. So in the event that there is a positive balance outstanding in the pool, the WDA is computed in the typical manner. So on the other hand, if there is a negative pool balance, the amount is written off as a balance charge and the pool balance is carried forward as nil. Single assets TD pool. So sometimes we have assets that are split from the main pool and placed into their own column in the computation. So this happens on occasions. This take place when there is only one assets participating in the pool. A long proprietor or a partner in a partnership may be required to depool some assets, such as those that are used for private purposes by the sole proprietor or partner. So, in addition, there are assets that can be eliminated from the pool, such as assets with a short lifespan. In order to a rule of a single asset pool when it comes time to dispose of it, we need to do so. So as a result, we reduce the pool balance by the amount that is less than the sum of the sale revenue and the cost. A balancing allowances is created if there is a positive balance that remains after the disposal of an asset, which result is in an increase in the overall capital allowances. But if there is a negative balance, a balancing fee will be incurred, where will result is in a reduction of the overall capital allowances. So business sessions during the period in which the business is closed, any additions are assigned to the columns that are appropriate. On the other hand, during the period of closing, there will be no annual investment allowance, writing down allowance, or first year allowances distributed during the final chargeable accounting period. When a business ceases operations, the disposal are reported in the standard manner, with the lower of the sale revenues and the cost being recorded. It is necessary to compute adjustments for balancing for each and every column. A balancing allowance is provided in the event that a positive balance is still present, but a balancing fee is incurred in the event that a negative balance is sustained. Uh, Note that the cessation of the business is the only time that a balancing allowance can arise on the general and special rate pools. Balancing charges is equal to added to the profit for the final period, and a balancing allowance deducted from the profit of the final period. So the only time that a balancing allowances can be applied to the general and special rate pool is when the business is shut down. So this is a crucial point to keep in mind. On the other hand, a balancing allowance is subtracted from the earning of the last period, while a balancing charge is added to the profits for the final period when it is calculated. Short or long period of accounts, any type of business can have a period of less than 12 months. Sole traders and partnership can have periods more than 12 months. Allowances are time apportioned accordingly. Take care with SRP, WDA, or AIA due to rate changes. So, but companies will never have period of more than 12 months. Okay, so FYA are never time apportioned. So it is basically it is possible for businesses to have periods that are less than 12 months, particularly a sole proprietorship and partnership, which can have a duration that are longer than 12 months. Despite the fact that allowances are distributed in accordance with the time period, businesses will never have periods that are longer than a year. So it is very important to keep in mind that first year allowances are never assigned a specific amount of time. Short life assets election available, and in the election is made. So here, short-term assets and the election that is accessible for that category. A short life asset is an asset that is predicted to have a useful life of fewer than 8 years, with the exceptions automobiles. So if a corporation decide to invest in a short-term assets, then these will occur. The item will not be included in the journal pool, rather it will be stored in a column that is distinct from the others. This distinct handle makes it possible for a balance allowance to be greater upon the disposal of the item. So if, however, the item is not sold during the next 8 years, what will happen? When this occurs, the asset is returned to the journal pool at the tax written down value that it was originally assigned. So it is important to remember that decision to treat investment as short-term assets must be taken within 2 years of the conclusion of the accounting period in which the expenditure was incurred. So if the asset is not sold within 8 years of the end of the accounting period of purchase, transfer back into general pool as its TWDW election of short term uh, 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 treated must be made within 2 years of the end of accounting period in which the expenditure was incurred. Allowance liable is your purchase eligible for AIA is year of purchase. AIA should be allocated against main pool items before a short life assets. If not covered, the AIA, the W written down allowance of 18% is available in the normal way. Assets with a limited lifespans are qualified to receive the annual investment allowance AIA in the year that they were purchased. So it is essential to allocate the AIA against goods from the main pool before dealing with the assets with a short life. Additionally, the writing down allowance of 18% is available in the typical manner in the event that the asset is not covered by AIA. On the other hand, should a corporation choose to invest in assets with a short lifespan. So this election is being held with the intention of reducing the total cost of the assets throughout its lifetime as opposed to claiming a writing down allowance in the future on assets that has already been sold. So there is no use in making an election for a shorter life asset if the entire cost of the asset is eased through the AIA. So this is because the election will just generate a balancing charge when the asset is disposed of. Should be election be made as we go on the primary categories of capital allowance here and there. Maze as we go on primary categories of capital allowance. Okay, so in April 2019, the writing down allowances has been established uh, as a rate of 18%. Per year on a declining balance basis for assets that are part of the general pool, while the rate for assets that are part of the special rate pool has been set at 6% per year. Annual investment allowance, this provision enables during this provisions uh, enables a duration deduction of 100% for the initial 1 million pounds of expenditures within a period of 12 months. So the AIA will be 200,000 pound beginning in January 1st, 2021. So the first year allowance is a measure that enables a complete deductions of 100% on specific assets such as low emission automobiles and energy efficient technologies. In order for businesses to efficiently manage their tax responsibilities and reduce the amount of profit that are subject to taxation, certain exemptions are absolutely necessary. To get better understanding of the primary categories of capital allowance, uh, so the writing down, we will talk a bit more about, writing down allowance is compared to rate of 18% of years for assets that are stored in the general pool, whereas the rate of assets that are stored in the special uh, 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 rate pool is 6%. So rates in the 6%, sorry here. So 6%, this interest rate is applied on the basis of decreasing balance as of right now. The annual investment allowance permits a deduction of 100% of for the one million pounds of expenditures made within a period of 12 months, the AIA will be 200,000 pound beginning in the January 2021. So auto insurance, this is to keep in mind that the Auto Insurance Act does not apply to automobiles, and the maximum limit is time apportioned in the event that the term of account is not 12 months. So certain assets, including as low emission automobiles and energy efficient technology, are eligible for deductions for a 100% under the FYA first year allowance. Consequently, this indicates that businesses are able to deduct the total cost of these assets in the same year that they are purchased. Uh, in spite of the fact uh, that the accounting term is not 12 months, it is essential to keep in mind that FYAs are never made prorated. Because of this, FYAs present businesses with a significant chance to reduce their tax burden by investing in technology that is both environmentally friendly and energy efficient. That's it for today, guys. This is some websites for your for further reading, or you can consult for references and further reading. Yeah, this is our second lecture is completed now. So tomorrow will be our third lecture. This was quite long, obviously 63 slides. So we split into two parts. So no one of you have a recording any previous lecture, first or two, part one, or obviously this one you will get by Monday. So have you got any recording, anyone? Victoria?
Not yet. No recordings yet.
Oh, so you haven't got any recording, Lords?
Yeah, sure.
No,
Okay.
me neither.
So who, Harriet, you didn't get any recording as well?
I had a recording on the website.
You mean your Moodle?
Yeah, at the module, yeah.
Yeah, you will get on your Moodle or your email. So have you checked your Moodle, Lloyd?
Not yet, because
Just check if you can now, if you can check that. Otherwise, I'll make a note for you as well. Victoria, you?
I'll check Moodle. I'm not quite sure.
Okay, no worries. Okay.
Thank you.
Anyway, I'll make sure by Monday that every one of you get recorded lectures.
Okay.
okay, thank you.
Okay, thank you very much, and I'll see you tomorrow at 12
Okay.
o'clock. Okay, all of you
Alright,
have a
okay,
link,
thank
lecture
you.
link, session links, everyone, for
I
tomorrow.
Yes.
No, I haven't got it yet.
I have to register for tomorrow. Yeah.
Yeah, this is basically this will say that assignment session, but obviously we will discuss our lecture third one, 3, and you can use same link assignment. So
Oh.
in next
Okay.
Saturday we'll discuss assignment. So you don't have session for link for tomorrow.
Yes.
Yeah, I got it on the group chat.
Okay, group chat, business taxations, just let me check for everyone. Which group, which one is it, Victoria?
Business taxation. IFA.
Yeah, all right, okay, that's fine that. Yeah, I will share link here tomorrow before lecture, okay?
Okay. Thank you.
Okay, thank you very much, everyone, and have a
Thank
good
you too. Have a nice day.
good
Bye.
weekend.
Thank you.
Nice. See you tomorrow at 12 o'clock. Bye, everyone, for now.
Bye-bye. Bye.